This episode is brought to you by Baby Ethereus. You may have heard of Ethereus, the Ethereum mining income token, but Baby Ethereus is a hyper-deflationary token on the BSC chain that provides great opportunities and rewards for Ethereus token holders. Baby Ethereus has gone from $300,000 market cap to over $5.7 million in 1 hour. Stake Baby Ethereus and get raffle tickets that enter you to win a 2022 Tesla Model 3. Visit babyaeth.com for more information. Link in the description below.
This my two Satoshis, who need 2 cents when they can get double from stacking Toshis, yeah.
It's your boy Crypto Blood and welcome to another My Two Satoshis crypto news update. Today we gotta look at what Meta or Facebook is planning to do with their Metaverse platform, and actually I'm gonna give a round of applause to them for screwing this up, because this only makes those decentralized metaverses look more enticing, in my opinion. They want to take 50%, 47.5% I think to be exact, of the revenue generated on their platform from the creators. We'll talk about the details of that here in today's episode. I think that is insane. After taxes, what the hell do you have left? Absolutely nothing. They're shooting themselves in the foot on this one. And we'll also take a look at something that Mike Novogratz echoed in the past week over at the Bitcoin 2022 conference in Miami. I was down there, saw a couple of fans and subscribers, and I had a really great time. So shout out to everybody that did make it down there. But he talks about something that I've been echoing, and it really, you know, people think I'm bearish on Bitcoin just permanently, like I'm a perma bear. No, I'm just giving you the direction the crypto markets are going to go short term if the Federal Reserve continues to do what they are doing, which is raise interest rates. Okay, so Mike Novogratz in this Bloomberg article talks about how Bitcoin will start heading higher once the Fed pauses. Like, I totally agree with that, and I think they will pause and maybe even try to reverse, but most likely and for certain they will be pausing that interest rate hike after that this caused from these hikes. They won't be able to take it anymore. Once the markets, you see equity markets head down 50% from here, they're going to stop. They're going to stop raising rates. But until then, I think you're going to see it's going to be a tough time for cryptos to head higher. And so that's what this article from Mike Novogratz talks about, basically saying that Bitcoin is on its way to 500,000, even $1 million. But you know, that resuming rally in Bitcoin won't happen until the Federal Reserve pauses what they do, and that's right in line with what I've been talking about. So we're going to take a look at that in detail. Also, Hedera hash graph, you guys know I'm a big fan of this blockchain. People say, you know, the critics out there say it's centralized, and the way they have their consensus mechanism, it's called a DAG, and we'll go into that. But you know, a lot of critics, but I'm actually a very big fan of Hedera because it's a different way of doing blockchain. It's actually not a blockchain, it's a hash graph. I love that it's a different take on doing distributed networks, and you need to have that in your portfolio because you don't want to be all one way, right? You want to diversify not only in your blockchains, but in the tech and consensus models that distributed ledgers are running on. So we're going to look at what Hedera is doing today. They've allocated $250 million to the Metaverse. Okay, that's going to be going toward gaming, sports, and fashion and entertainment. And they've linked up with a company called Sayl. We'll take a look at this. They have a token, this company. Never even heard of them until today. So we're going to take a look at all three articles on today's episode of My Two Satoshis. Let's get it. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. And don't forget to get over to BitYard to get your fiat to crypto on-ramp for free. No transactional fees with some of their service providers. So you want to get over there and click that buy crypto button after you sign up with the link below, and you can pay 0 transactional fees to get in the crypto game. They do accept Visa, they do accept MasterCard. This is where you want to do it. You don't have to keep the coins on there. You can take them off if you want or trade them on there as I do. But bityard.com for more information on that. And what do you know? Stocks down, crypto's down. We got the S&P down almost 1%. We've got NASDAQ down almost 2%. Not a great day. S&P 500 declines and heads for a losing week amid big earnings and high inflation. Again, the high inflation is where we're seeing the issue, because typically, to be honest with you, a higher inflation print is good for equities, is good for cryptos and other assets, because that means the price of that asset is going to head higher along with the inflation. However, in this scenario where we have ourselves in, higher inflation means the Federal Reserve has to come in and slow that down. So that's why it's not good to see higher inflation, because that means, and it's kind of inking in the probability of an interest rate hike or multiple ones being more aggressive in the future. That's going to happen almost guaranteed if this inflation continues to rise. So that's why we're seeing stocks down. And of course, this is why we're seeing cryptos going down. I said yesterday on my last video that we were seeing a little relief rally. Well, it did extend into yesterday, but guess what? We're traversing all of that now, and we're heading lower as I thought we would. And we're gonna, I think at this point, with this crazy move here, almost shoehorn move back downward, it's going to head below this 39,000. I think that $39,000 area is where I'm looking at. If we breach, then lower we go. 35,000 would be next. While all y'all out there talking about one Bitcoin is equals one Bitcoin, I'm turning one Bitcoin into two Bitcoin by being an active trader here. So you can hodl all you want. I'm doubling up, tripling up on those coins. Short right now in Bitcoin, went short at 41,000, took some profit just a couple of minutes ago, and I'm going to let the rest ride out. Ethereum, same deal. We went short at around 3,085, took some profit a couple of minutes ago at 3017, and I'm just going to let that ride out. I think we're heading lower, so that's where I am on my active trades. I want to highlight really quickly before we get into the Facebook Meta news. I want to talk about what Mike Novogratz said. Crypto billionaire talked about once the Federal Reserve takes a pause, Bitcoin would start taking off again. He said could. I'm saying would. I think that's a guarantee. If the Federal Reserve pauses, cryptos will take off, stocks will take off again. But it's almost like, I've said this before, how much blood are we going to see before they capitulate and pause on the interest rate hikes? I think a decent amount. So that's why I'm saying you got to be careful here. Have some dry powder on the side. I'm not saying go 100% fiat or stable coin. Never want to do that. But you lessen your risk in these environments, because you should know from a macro standpoint, we are going to head lower. So he's saying again that the Federal Reserve at this point very hawkish for a while, he says, due to the high inflation. And that's what I was saying earlier. You know, as long as that inflation is high, the Federal Reserve will be hawkish. Hawkish meaning concerned and not in a positive stance on the economy. They're going to be taking steps to slow down the overheating economy. Okay, and that's due to the high inflation. And he said they will likely continue to raise interest rates by 50 basis points soon. But he says as the economy slows down and the Federal Reserve steps back, Bitcoin goes to the moon. Yes, I am in total agreement. Let me know in the comments below if you're understanding what this concept is here and why we're seeing this. If not, let me know in the comments below. I can explain it further, but this is exactly what's going to happen. So we're heading lower from a macro standpoint. I'm not saying we're going to have many rallies in between, but I don't see anything fundamentally for us to head higher or shift the overall narrative or sentiment in the crypto markets. There is no news that can come out, honestly. I mean, we may see pops like we saw with the Russia, trying to use Bitcoin as an exit out of the ruble and all that. We saw a nice pop on that. But the overall sentiment, the fundamental play here is that Federal Reserve will continue to raise interest rates. Ergo, cryptos, stocks, everything has to take a leg down. All of those naysayers, I want to hear what you have to say about this analysis. Hear, what you feel about Mike Novogratz's assessment of it, because it lines up with Crypto Bloods, and I just want to know how you feel about that. I'm not, one of those emotional investors, so I'm not going to, get excited about fairy tale ideas about Bitcoin going to $1 million and so on and so forth. That's all cool and dandy. Will Bitcoin hit $1 million at some point in the future? Probably. But let me tell you this, $1 million Bitcoin means most of y'all out there are going to be living in misery. That means the economy, that means the dollar is in the trash, and that means the US economy is probably at its worst. So saying, you see Bitcoin at $1 million, that's all fine and dandy, but that means on the flip side that we're not in a good situation economically. So yes, Bitcoin will head higher. There's no doubt about that. But I think in the short run, you have to be very cautious and protect yourselves in this environment. But I want to talk about Meta, i.e. Facebook, aka Facebook. Oh my God, I can't believe they have the audacity, the unmitigated gall to do this. And they didn't even say it outright, but with a little digging, some of these reporters found out how much they're talking about taking from you guys who sell your souls to Meta and want to get into the virtual meta world over on Horizon Worlds. That's their Metaverse platform. Looks like they're going to be taking 47.5%. That is crazy. So of that, 30% of the sales made through the MetaQuest store, that's what they're taking. 30% of those sales, if you're selling in the MetaQuest store, that's where you would sell your apps and games for its virtual reality headset. So that wouldn't necessarily include you, the common folks. This is more so for the game houses, that the game developers and game houses that are developing within MetaQuest store. This is where you would get hit 17.5% fees in Horizon Worlds. So that's where if you're in there, you're making clothing or you're selling different virtual items and services, Meta/Facebook will be taking 17.5% of your coins. Now, in comparison to, let's say, a OpenSea or Rarible or Looks Rare, any of these other ones, what's the average commission they take? 2%, 2.5% max. So this really puts them at a disadvantage. And I see why their stock is down today, because this is some nonsense. This is them shooting themselves in the foot. But again, fine with me, right? It should be fine with you as well. That's only going to make the decentralized metaverses look more enticing to individuals who are trying to figure this whole metaverse space out. So again, OpenSea takes 2.5%, Looks Rare takes 2%. So a very, very different story when it comes to commission taken by those types of platforms. This is crazy. Let me know what you guys think about this. Is this expected? Is this to be expected? I absolutely think it is. And honestly, you know what this is? This is what happens when you're a centralized, publicly traded company. You have all these financial projections and stuff you got to meet, to justify your price, your stock price, your PE ratio and all that stuff. This is why they have to do these types of things, because those are the numbers they've backed into, and they said, hey, I've got to take 50% of these sales to make this look attractive to our shareholders. Decentraland, Looks Rare, Rarible, OpenSea, all these atomic assets, all these other marketplaces and meta worlds don't have to do that. They don't have to worry about that. So that puts them at an advantage. And I'm actually glad to see this happen. This just shows you that Meta is starting off on the wrong foot. It's funny because back in November, Zuckerbucker criticized, I should say, the Apple people in the Apple Play Store for their 30% developer fee, but then they turn around and they're charging their developers 30% of their sales as well. So looking like a hypocrite to me, right? But I thought I would just share that with you. On another note, another metaverse move going on is with Hedera Hashgraph. And you guys know I am a huge fan of Hedera, HBAR. I own those tokens, have been a hodler of those for quite some time. They've started allocated $250 million to their Metaverse fund. And that fund is going to go toward onboarding brands in the gaming, sports, fashion, and entertainment industries. And you may ask, how can you maybe take advantage of this move that they've made? Well, you can't directly, or you can directly by purchasing the HBAR token and holding that and maybe seeing some benefit from that long term. That's a longer term play. But possibly the other way is to get into this token Sayl. I've never heard of it. This customer relations management platform, and their website, I brought it up, is Sayl.finance. Go over there and check it out. They do have a token. I'm not sure about it. They have this what they call engage to earn concept. Check it out. There's their token right there. I don't even know where you can buy it, if it's out or anything, but you can go buy Sayl.finance. That's SAYL.finance for more details on that, but HBAR has earmarked them to be the customer relationship management platform for this fund. So hey, that's maybe one way you could take advantage of it. But again, you know, I'm very bullish on Hedera. There have been many critics about it because they say it's centralized. But you know, the way this is set up, this is how they have their consensus network set up, is like a none other really out there. That DAG is a different way of doing decentralized ledger technology. It's not a blockchain. HBAR is not considered a blockchain, but what I do like is they select qualified companies to represent and be node providers on the platform. So it's kind of a slow creep to decentralization, but in a more vetted way, a vetted process. So eventually there will be thousands and thousands of vetted real companies that are validating on this blockchain. So I think that is essentially going to be as decentralized as any other, when you have thousands of different companies out there validating nodes on the HBAR network. So I'm a huge fan of it. You guys should look into it if you're not familiar with HBAR. They've been slowly and secretly doing their thing and building a very good community and base. So I wanted to highlight that Metaverse news out of HBAR's click. But that's pretty much it. That's all I got for you guys. Give me your feedback on these articles for today. HBAR doing that $250 million fund for the Metaverse, and also with Meta, Facebook's Meta. What do you think about that 50% cut they're going to be taking out of your money in their Metaverse? I mean, I think we all know the answer, but do you think it's going to have a great effect on them long term, or will the sheeple just go on over there because it's Facebook? That's the question really that we should be asking. You'll be surprised at the sheeple and how they behave, man. It's definitely counterintuitive. And also want to know what you think about billionaire Novogratz comments about Bitcoin not really going anywhere or taking off until the Fed pauses on their interest rates. That's right up my alley. I hope you guys understand that as well and are preparing for that. That's it though. My two Satoshis, Crypto Blood. I'm out of here. Holla.